The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. It's my pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time, market days. And thank you, Steve, for 2 great hours. We have programming right through the day today. And this should be very exciting because what are we looking at here? We're looking at the market holding up into that 1st of May period, but we haven't gotten close yet to either recovery highs or all-time highs. I'm showing the E-minis right now at up 475 at 1870.50. This is the S&P. And the 120-minute chart had 2 dojis, one small doji, and then a candle with a long wick that tested the 9-period moving average. The strong MACD, strong stochastic at 94%. Leg D is where you got to think that the next pullback could be the deepest, and this is exactly what we've seen since the low of 1844 back on the 28th, the evening of the 28th. And very narrow peak A, peak B, peak C. Finally took out the high bar of the of noon on the 28th. That was at 1871.75. Took it out, went to a high this morning of 1874.50. Dropped suddenly to 1865. Hey, that's 9 points. That's a very sharp pullback. And then came back quite strongly. But here's the single line that needs to be taken out is the S&P futures needs to go above 1875. 1874.50 is the high for the day. It really needs to climb into that area, which will say, great, now I can tackle the previous high of 1882.50. And I don't know if we've got enough energy left to be able to go into Thursday, with the 1st of May, just sneaking to a new recovery high, because what that'll do, and this is going to be very important, what that will do to the monthly chart of the S&P, SPX.X, will extend leg D. If there is no new high above 1897.28 in the entire month of May, we've made a pretty significant intermediate term top. If we do get that, we'll just wait until we get the other indications to say May will be a month that we pull back. Meantime, back at the ranch, this is holding pretty darn well considering what we were looking at on Monday. INDU on Monday, it was yesterday. Was it Monday? On Friday. And look, the Dow is struggling to try to take out the high of 16,565 that was made on the 22nd. The moment it goes into the 16,566 area, that's leg C, with a really good chance it's going to tackle the 16,631 high of the 4th of April. Now, what's really important about this, were it to do that, I have no choice but to call that a leg C, and that would say that any pullback in May will just be a pullback. It will not be a major top. We'd have to, we would have to wait for leg C to culminate with a peak C, and then a pullback and leg D will start. That could all happen in May. But it's very interesting because right as we're speaking, the arch formation is just about to be taken out, and it's more like the cup and handle pattern that we're looking at in the weekly. Most importantly, as I showed subscribers in a very detailed report over the weekend, and for subscribers, please remember, I'm trying my best to get it out Saturday or Sunday so you can see the daily and then the weekly and monthly Dow charts over the weekend, and maybe any other chart that I think is worth perusing. Most importantly, There's a down needs 16,632. Extend leg E in May. That's all it needs. And so far, the candle's quite good. So I had a quick question. Let me just run these down. Dow's up 76 at 16,525. S&P's up at about, it's up 6.8 at 1876. Compound is up 16 at 4,091. Gold is about unch at 12.99. Silver's down a tad at 1953. Platinum's up 13 at 14.32. High-grade copper is pulled back, but it is at 3.08. Not bad. And crude oil is up sharply. It's up at 101.95, up $1.11. Bonds are down a half a point at 134.7. Oh, let me just do this right now. Remember, I was talking about for subscribers, I said there's a potential peak F in the TLT. We got that. It's a good chance we're going to make a peak C this week in the TLT if there's no high above 111.99. Let me just type that in. 111.99. And the TLT is trading at 110.46, only down 0.33, but under the 9 EMA. And the weekly chart has made a nice U-shaped pattern, and it keeps breaking out to modestly new higher highs. This is leg C. It'll be peak C if there's no high above 111.99 this week. And the monthly is just in leg A. So good action, but bumping into a lot of resistance at this particular point. But the stochastic's still at 86%, but it is turning down. MACD is still strong. So that's a good sign. And one other thing is the dollar. Poor old dollar. I always talk about this. Dollar always looks like it's rallying, but all it's doing is just riding in quicksand as the wheels spin. And so far, it doesn't go anywhere. It's 79.79. It really needs to get to 80.30, 80.40 to show that it has the strength and the temerity to be able to test the 200-period moving average of the weekly chart, which has resistance at 80.42. So I think, Euro, EUR, USD. And then we'll go to calls, and we'll also look at a couple of things that I want to look at here. I've written them down, and a couple of questions that I need to answer. First, we'll go to Tom in Dallas. Hi, Tom. How are you?
I'm doing great. How are you doing, Basil?
I'm very well, thank you. You'd like to look at
Nova Gold.
Ah, okay. Nova Gold trading at $3.52. The gold resources made a high. Well, it made a low in the monthly chart back at 37 at 0.37 back in November of 2008. Then in the Chapman wave methodology, you count the higher peaks and usually go to a D, E, or even an F. F is where you got to be really careful. And what it did went A, B, C, D, E. The MACD was still very strong. Finally got to an F at 16.90. That was a pretty good percentage move. And it went to 1690 in December of 2010. And then what does it do? It comes back down. Excuse me. Let me just do this. I want to see if I can draw left side, right side price time match. I have to go to the most obvious bar, and that's that one over there. Give me 1 second. I'm just going to do this parallel. So far, everything looks successful in the monthly. Yeah. So what happened is the next time it pulled back, it went down to 1.90. And 1.90 was hit in June of 2013 and went peak A, peak B. Monthly chart says MACD and stochastic has rallied pretty well. On a percentage basis, it's gone from the most recent low of 1.90 to the most recent high of 3.41. So that's almost a 100% gain. And it's gone in parallel with the technicals. However, what is very important about this particular chart, it's saying that the amount of movement that it's had, if you had to compare it to other periods, is actually very tiny. So far it's saying that Nova Gold has acted quite nicely but it's not really showing tremendous strength over the last over the last rally. The weekly is different. The weekly is showing tremendous strength. It went to a peak D at 462 back the week of the 21st of March. It's pulled back sharply, and it shows the pattern that says it could start to make the H pattern, goes to a lowercase h, that goes to an M. Let me just show you exactly for those for those of you who are listening at home or looking at your computers. Chart I'm showing now, I just need to find that. I think it's chapter 17. Let's see, chapter 7. I should know it by now. Chapter 17, the dreaded H pattern. We now call it just the H pattern. That shows you the price keeps coming down, makes these little scallops, these arches, and breaks the left side low, and eventually it starts to make a much larger lowercase h that turns into a lowercase m, and then it becomes a continuous pattern. I suspect that that's the pattern we're looking at up at a high level, because it's way off the lows. And what's really important about NG is if gold doesn't start to move, or if the how can I put it? If gold doesn't start to move soon to boost the gold stocks, or if you get that rotation that often says gold stocks are going to move before gold itself, then the daily chart should not have broken down as it did yesterday. This was one of the stocks that I had looked at as a trade in my opening call. We missed getting it, and then I didn't mind missing it because the pattern I was looking at said that there's just really a good chance that it's making another H-shaped pattern now. And yesterday, actually last night, when I looked at the chart and I saw it dipped strongly below the 9-period moving average, and I looked at the technicals, thought to myself, gee, it was so close to trying to break out to get towards the 388 level. Do you have a position now?
Well, no, I was looking to see if picking some up at where that little bit of a base is on the daily.
Somewhere around the 340 to 335 area?
Yeah.
You know, that would be the way to trade it. That would normally be the way to trade it if it was coming off of like a leg, strong leg A, then it goes to B, and then it pulls back. But when it's already made the D, and now the tide has changed and it's coming back down, my only concern is you would expect that it between 345 and 335, the 335 was the most recent low, I can double check, yep, 335, they would actually have a lovely bounce because it would be the second H of this lowercase m pattern. And if it's successful and it doesn't go under 335, then it could have a bounce that should take out the most recent high of 370. So here's what I'm going to recommend. There's a chance that it takes out 335. It's going straight down to 320, the 200-period moving average. Let me think a little bit about how I'll articulate for you exactly what my plan would be. And we've got a break coming up, so if you can hold on, do you mind holding?
No, I don't.
Okay, great. I'll be back with Tom and Travis straight after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back, and the Dow is up 69. S&P is up 615. They're in parallel motion. The Dow is just a tad stronger, so at least that's okay. We are on with Tom in Dallas. We're looking at NG, which is Nova Gold, and I did a little work during the break. There's a pattern. The exact opposite of the pattern that I've been talking about is a pattern that I've been discussing for a very long time. Maybe years. I developed this. What am I talking about? It actually goes back. It's the Sears and Roebuck pattern. It's where, Sears Holdings pattern. It's where the price comes down, and then it makes an H pattern, and this is from the top. It comes down and makes an H pattern that I call the right arm, the right shoulder failure, retest but successfully, and then starts up, and that can go all the way back to the top. Well, if you look very carefully, it's the inverse of the pattern I call the drop bucket pattern that I talk about on my CD. It's a double top pattern. Well, what we're looking at here is 370 that was hit 3 times in the 100-minute chart in Nova Gold. It goes to this beautiful doji candle of 335 at 11:30 on the 22nd. It runs up to 370, pulls back, and does 2 taps, making an arch formation at the 370 level, and then it pulls back. So I'm looking at this and I'm saying, gee, that's the inverse of what I always talk about. So there's a chance that it could come back and retest this candle. The candle has a high of 345, a low of 335, and a close of 312. And that's the candle 11:30 on the 22nd. Now, there are a couple of things I want you to just talk about very quickly. One is gold is not giving me a signal, anything other than it's just range trading right now. It's just kind of stuck. it's making the H pattern that goes M pattern. So when it's in this particular mode, unless it decisively breaks into the 1310 area, it's at 1298. That's 40 points, 32 points higher. It's just kind of stuck. That's number one. So as a trade, what I'm going to say to you is that I would not get carried away, but as a trade, I would think that if NG pull back a little bit more, maybe to the 342 area, and then started to move higher, I would just nibble on a position and say, okay, my target on a percentage basis from 347, say, to 370, that's a very nice percentage, 8%, 9%. But more importantly, it means you're in the stock, you're understanding exactly how it's trading every day in relation to gold. And I'm about to sneeze. Hold tight here. Nope, I'm not about to sneeze. And but the 356 is the 9-period moving average that it needs to clear. If it clears that before testing the lower level, then it's kind of stuck in this trading range, and you've got yourself a much smaller percentage move. Now, your big question here is this an intermediate term nice position to be buying it, because over a period of 3 to 5 weeks, it looks like it's going to the 390, 420 area? And my answer to you is no, I don't think so. So there are two things. As a quick trade, if you want to play percentages, take a small position, you can trade it a few times going in between the 340s and the 360 to 370 area. Then you got to be careful because it can turn around. The other thing is, I don't think I would actually buy this stock as a more than a short-term trade. So I hope that helps you.
Yes, thank you, Basil. It does.
Thank you very much for calling, and good luck with it. As you know, I follow Nova Gold very closely as well. So thank you for calling. Let's go to Travis in St. Louis. Hi, Travis. How are you?
Doing great. Long time no chat.
Yeah, good to speak with you. And you're looking at?
I'm looking at Herbalife real quick, and the reason why I'm looking at it, I am mainly long in my portfolio right now. I think I've got 5 longs that I'm working with and 1 short.
It sounds like my portfolio. Yeah, longs. I'm shocked.
Well, it's close. I mean, it's not the same, but it's close.
Okay.
But I'm kind of looking to add 1 more short here just in case, but I'm pretty confident that we're going to go up all the way through the rest of the week, probably till Friday.
Let me just tell you something about Herbalife, trading at 0.49. HLF is a symbol. It's in a leg B, but the moment it goes above, let me just double check that. Yeah, leg B, with a chance of hitting 61.77, which is the 200-period exponential moving average. I just mentioned Sears Holdings. Between Herbalife and Sears Holdings, I'm going to include Harley-Davidson. They're the 3 stocks that I love not to short. Okay. I keep looking at them as potential shorts, and every time I say don't do it because they have a life of their own, and unless you time it absolutely exact, invariably it's going to go against you. So I think you're absolutely in the right position right now. Give me a moment. Can you hold on through the break?
Yeah, absolutely.
I'll be right back. Folks, Dow's up 85, S&P's up 8. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, and a nice rally going on here. Very, very quiet, but until I start to see a much stronger move, and now last 15, 30 minutes, I've been getting it in the momentum stocks and the biotech stocks. This rally, if that kicks in, that can last right through until May. We'll see what happens. And I just want to ask, Travis, just 1 second before we get back to your stock. I did get a question in the den, and I want you to answer it right away because I know that I'm running out of time, and it's really important. I kept getting questions about the XLE for quite a while, and I've been saying, no. It's looking good. It's looking good. Well, now the XLE, the S&P Energy, is in leg D in the daily at 94.61. The question I had in the den was SE, which is a stock. I just don't recall doing it before, but the called Spectra Energy. Yes, I do recall doing it, but a long time ago. Leg E in the monthly, leg E in the weekly, leg E in the daily. I'm really watching this really closely because it might start to say that if it extends from here, that's really important, and if it pulls back from here, that's going to be important. Well, and it's going together with the XLE. Then they match. That's why I didn't want to overlook that right now. Let's get back to Herbalife. And as I say, this is one of those stocks that I constantly keep, just for a year and a half at least, I'm saying a great short, but I don't touch it as a short. Not when there are heavy players in this that say they're having a fight. Let the big guy fight and we'll step aside. We don't have to get involved with that. But on a very short-term basis, I like it. I did a little bit of work on the 120-minute chart. It's decisively pierced the 200-period moving average. The 9-period moving average is about to cross positively, but things are very important about the stock. The 59 level has been kind of not a fulcrum. It's been a repellent zone. It goes above it, closes above it, and then it comes right back down again. So the story, someone in the den said, "We got to, folks, the den is just a great medium for knowledge." Pete Dean, the den, says, "Basil, a documentary on Herbalife is coming out this Friday." Wow. Okay. So all I can say is that so far, I think you're on the right track. Maybe Monday there'll be a problem, but up until now, I think it's going to have a bounce. If it takes it out, doesn't even have to close above it. If it goes above 61.30, that's a leg B in the weekly. And even if it was to start, which I think it's going to do, to make arch formations, that's what you want to see. Are you in calls or are you in the position?
No, I was actually telling you I have 5 now. I was telling you I have 5. Yeah, are you there?
Whoops.
Hello.
I'm not sure if Travis is listening with a little delay. Oh, you here, Travis? What did I do? Did I hit something? I did that the other day. Hold on. Nope.
Battle.
I'm back. I'm here.
Yeah, Basil?
Okay, yes.
Can you hear me?
Yes, I can.
Okay. Hey, I was just telling you, I've got more longs than shorts, and I was actually going to add this to my short list maybe later in the week, and I didn't know if it was going to turn into the M pattern, the H to the M pattern here.
You say, okay. Well, that's exactly with what I'm talking about. So as
because I think the broad market's going to go up till Friday at least.
I don't know about Friday, but the bias right now, until the volatility index, which is at 1375, pushes back to the 1460s or higher, maybe 1490s.
Right.
At this particular point, I think that you have an upside bias, and there are enough stocks that have been beaten down. And I have to tell you that if we're getting, for instance, we went long a stock this morning, the biggest of the big, and then it got beaten down, and we got stopped out for a 1%, 1.2%, I think it is loss, a 4-point loss. And now it's picking up. And I was right. I was a little too conservative on the stop. If this particular stock starts to move, I don't think it's just a one-day bounce. I think it's got 3 days into it. So that could take us to Friday. So here's what I'm kind of,
it's kind of one of those things where, I think this was kind of the Bears' last chance this morning to try to take us down, and they failed. And I think now we're gonna see them get squeezed the rest of the week with Yellen talking tomorrow.
Oh, and Yellen's, and she's definitely not going to say anything negative. I mean, I don't know why she hasn't got any reason to say anything negative.
So this could be, I kind of think this might be what we're coming to a head here on this big rally since, 2 years ago, that we're going to kind of get that blow off top in the next 3 to 5 days.
Well, if you were long, you'd be in the right stock. If you're waiting to short it, you're just going to have patience, and I'll explain exactly what I'd be looking at in Herbalife. And the problem with Herbalife is that there's another story to it. It's not a market story. There's another story involved there. You're playing two things. You're playing a question here is this not leg D? I've just got A, B, C. The question is, am I expecting a leg D? I don't know. I've spent a lot of time on this one, and all I can say is that I don't know if it's going to it might be one of the only failures, or it might be a stock that just really carries all the way through and goes above the all-time high of 83.51. I think that's the all-time high. Let me double check. Yep, all-time high. And that'll be going to leg D. So there's a lot to go between 60.61 and what did I just say, 83 and 83.51. Yeah. So my theory right now is that Herbalife, if you're going to short Herbalife, you got to short it purely on a technical basis. And to me, that technical basis will be if there's a rally and it hasn't gotten to over 80% in the stochastic, and the stochastic suddenly turns back down sharply with the price, that'll say that's a good opportunity. It might not even be a D. It might be this leg B continues. Wait, I've got to be clear. I need to make it clear that above 6130, you always have to pull the chart back far enough, and I'm pulling it back far enough. And it says that this is a peak C with a very sharp pullback. It was a peak C, and a push above 6130 in Herbalife starts leg D. So it's gray B until it passes that previous peak, and then it picks up that previous peak as D. That means it'll take it towards the 6177 level. That's what I'm going to be watching real closely. But tell you the truth, I don't know if this is one of those that I'd rather put a market-sensitive stock, one of the really bad, beaten down momentum stocks that's failing to rally with the market. Right. That would be a better trade. But we'll watch it together.
I'm just trying to find a short that I can put in my portfolio to kind of balance me out here. I feel like I'm getting a little too heavy long, but I feel like that's the right position. I'm kind of scrambling to find a short to add, You know what?
I'm looking at it as well. I have a couple of ideas in the back of my mind. I didn't want to bring them to the forefront just yet. I wanted to see what Monday, Tuesday, and Wednesday brings. The stocks that are lagging, that should be rallying, and it probably is one of those momentum stocks that is just in failure mode, that's what we'd be looking, and that's the one that could come down the sharpest. I don't know if I want to have one of the momentum stocks that's actually participating and with a better percentage than the S&P or the Dow or the NASDAQ right now on the upside as a potential short. I want one that's kind of lagging. Because why? Because on the way up, you want to be choosing the stocks that either are making new highs or have the best relative strength or are in B, leg B, and potential to go to a C and a D, and then that can improve the weekly. And on the way down, you want the H pattern that keeps failing. So this is on the list. I just don't like it when there's another story attached to it. Do you know what I'm saying?
I hear you.
Yeah, so maybe this could turn out to be a fantastic one. It's always on my list as a potential short, and I don't short it because it can move up so quickly when they're playing games. When you've got Icon who can come in and buy 3 million shares or whatever it is at any point,
right.
I don't know if I can do that.
Okay, sounds great.
Okay, thanks for calling. Anyway, good eye, and we'll be following it together. So,
thanks,
folks, a couple of things that we've got here. Let me answer a couple of questions. Is January the 2013. In December of Herbalife, December of 2012, the high was 47.45. In January, the high was 47.16 in my Chase Station service. So that doesn't make an A. An A starts, the first leg up is on the 5th of May. May is at 52.84. That was peak A. Peak B is October at 74.91, and then you've got C at 83.51. And there's no other way. I've tried so many different ways to count this, but there's no other way because there was an instant restart way back. A potential instant restart, but it failed at a peak G doji at around number 73 high, pulls back sharply to, I'd say it was sharp, 24.24, and then it broke to the upside. So, yeah, I've got C, and I just, that's all I can do. So we've got Garo in Newport Beach. Hi, Garo, how are you?
How are you, sir? I'm good.
I'm very well, thank you.
Okay, regarding ICE,
Yes.
The daily chart, it shows that the stochastic is rolling down.
Yep.
But on the weekly chart, the stochastic is all the way at the bottom. Now, which one is correct now?
So give me 1 second. I'm just also trying to do the 120-minute chart as we're talking, which went to a G and pull back. Okay. Now, what I like to look at is that the fast-moving average of the MACD in the daily, the folks were looking at ICE, and ICE is the Intercontinental Exchange Group, trading at 201.92, up 33 cents, not participating very well in a move like this. So, Travis, this is one we're going to keep our eye on. It's already made a peak D in the monthly, a peak in the weekly, and it's making that scallop formation. Let me just show you the scallop formation. There it is, folks. That scallop formation that keeps coming down. Let's go back one chart right there. And that's what we're looking at here. So now let's get rid of this. Okay. So have you a position at all?
No, sir. I do day trading on that one. Yesterday I made very good money, but nothing today.
Okay. Good, because yesterday at that little doji top that it made, it went back under the 200-period moving average in the 120-minute chart. That was a gain resistance today at 203.30. The high today was 203.39. Boy, that is great to see something hit so closely. But here's what I'm looking at. The MACD fast-moving average, that green line, if one's looking at my chart on the left, that is still showing internal strength. That's why the 9-period moving average at 201.11 held this morning's low, and this morning's low was 201.07. Now, what's really interesting about this, the candle from yesterday is very small, what I call a Roman candle, Chapman wave Roman candle, but it's so small that I tend to say, no, that's not the candle we look for, but normally I would look for a trade halfway into the wick of a candle like this, which would say 200.88. If it goes under that 200.88, it's going to retest the low. Meantime, back at the ranch, what this is the first pretty decent leg A that it's had in a long time. So the big question is this going to turn into, let me just draw it right now, a series of arches that, oops, that's the wrong way, that in fact gives a limited upside. Let me put that somewhere over here. Or is this the start of an up move that has the potential to go like this? Let me just draw two parallel lines, which says that if it took out the high of 206.23 made yesterday by even 1 penny, there's a good chance that it could try to trade up towards the 209 area. That's really the question now, because the MACD is still very strong. The histogram, the little green lines are vertical and they're very green. There's a lot of distance between the 9-period differential and the red line, the slower moving average. And the stochastics at 82%. So it's saying it's a nice rally from the doji low of 188.30. Let me just type that in. And even if it's just a counter trend bounce, this bounce has the potential to go a little higher. A lot will depend, I'll tell you now what number. A lot will depend on if it could get into the 203.70s, and it's a 201.81 right now. I'll answer your question real quickly. There's still internal strength on the daily chart. The weekly chart is just showing bounce material. There's been no recognition by the MACD fast-moving average of the bounce. The stochastic has rallied, and there has been price movement, but the stochastic is only at 24%. And to have this sustain a rally, it will not sustain a rally if the fast-moving average, the green line in the weekly chart of the MACD, if that doesn't move higher. And the histogram is still very negative at -2. So I'm here in the camp with ICE, which is, once again, this is the Intercontinental Exchange Group. I'm saying that the top that was made is probably a pretty significant, it's already an intermediate term top. But I'm going to say to you, Gary, you've had your trade on this. The only time it's going to have another trade is if it goes towards the high of the day and tomorrow's a strong day, then it could have a bounce of about another 4 points. Hope that helps you.
Yes, sir. Yes, sir. Thank you.
Thank you. Congratulations on a nice trade. I'll be right back, folks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Okay, folks, a couple of quick things here, questions I had. Merck at earnings today, it's up $1.82 at 58.50, and I'm real thrilled. I have one of my subscribers has done many of my Chapman Wave Master Trader series, has used the Chapman, I should have done it, used the Chapman Wave methodology to trade Merck for I don't know how many years, like must be 2 years or something now. And he's just had this thing going higher and higher, and this is only leg C in the monthly. Good grief. Leg C in the monthly. I suppose you could call it F, E, F, G, maybe G/C, but everything about it is fantastic. 95% in the stochastic. MACD looks good. Oh, whoops, I moved the wrong thing there. The weekly is, in fact, leg E, a lovely strong cup formation that it broke out. It's actually also a stalk leg formation. Leg E in the daily, but still very strong. Take that away. It's not 58.82. It is at 50. 8.57. Isn't that nice? Hey, congratulations. It looks very good. The support is at 57.25 to 56.90 on a short-term basis. More intermediate term between 56 and 55. If it pulls back there, then it could pull back to 54, but it is looking fabulous. Next question was Yahoo. Yes, Yahoo is making that, trying to make that H that goes to an M pattern. Nice action today. The chart gave a very nice signal at a trough F in the Chapman wave. Fill the gap, and that's really important. What you want to see if you're long now, Yahoo, you want to see it tackle this candle right here, that Chapman wave, a Roman candle at 11:30 in the 120-minute chart, 11:30 on the 24th of April. It needs to break. If it can close, if Yahoo by tomorrow, this time tomorrow, if it's over 35.85, that's really nice action. It says, you know what? The weekly can start that H pattern that I talk about, the lowercase h, as the daily initiates that H. So that's yes. Most important, as I say, the support is, you don't take out yesterday's low of 33.65. That'll be a negative. Then the next question, wow, I had a ton of questions here. I didn't answer them all yesterday. Next question is, where did it go? V-shaped move in the SPY off Monday's lows. Are you more bullish now? Can S&P 1950 be hit in May? As it stands right now in my opening call, the irony is that we have one core short position, which is being negated by a full position, the 200% long of that particular sector, and it's doing really nicely right now. And I have only long positions. We had another long position that would have been up very nicely right now. Instead, we took a tiny loss. I might get back into it tomorrow. So, yeah, the answer is just, at least for now, long positions. That's just the way I see it. So let me do this before you, and then there was a question that I didn't answer yesterday. So what about your sell in May? Is that I'm waiting to May at this point. So natural gas, UNG, I'm using UNG. This is a leg F/A. One is very positive, one is very negative. At this particular point, there's nothing negative. It's a great candle. It's acting well, but it is stuck. It's trapped in this rectangle formation that says the upside, which if you're long, you'd like to hear. The upside in UNG says it could test the 27.5 to 28 level, and the downside says watch 25.50. A close below that would say, whoops, we're going back down again. So far, it's very good. So that was UNG. Did I do anything else? Oh, the housing. Yeah, housing. I'm watching housing real closely. It's really not doing very much. It's almost as if they are a lagging indicator right now. So I'm just stepping aside from housing, not short, just stepping aside. And I'm going to leave that. Now, let me quickly do this because you've got a great option show coming up right after this. Harrison Napa will be from Think or Swim, so stay tuned. Let me just give you this right now. If the VIX remains low, the volatility index under the 14 area, that's buying pressure. The moment it pops up into the 1480 to the 1510 area, watch out, they'll be selling. So far, this is good news. I'll be back, I think, with Tom later today. Have a great day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.